So there's a growing debate in markets about whether commodities may be approaching a turning point after a relatively quiet several years. Now, I'm not here to make a big macro call or declare a new super cycle, but what I do want to do is step back and look at the signals and why silver, in a case in point, has become the topic du jour and a useful discussion point for portfolio constructors heading into the early parts of 2026. Now, the asset class level, if we think about commodities, they're starting from a relatively undemanding position overall across the complex. Valuations are modest compared to history. Investor positioning or allocations remain modest, and sentiment is far from euphoric levels. Now, that doesn't guarantee outcomes in any way, but it does tell us the asset class doesn't feel crowded. Now, at the same time, we're coming off a long period of underinvestment in supply. That's concentrated to a few parts, but I think we can say that as a generalization. And that appears to be stabilizing and not rolling over. So if we look in a historical context, low positioning, constrained supply, improving demand, these have tended to occur in the beginning parts of a commodity cycle and not at the end or at the earlier stages. So from an asset allocation perspective, that alone makes commodities harder to dismiss in a multi-asset setting. So silver is getting a lot of headlines for obvious reason. It's interesting in its characteristics or its attributes because it sits in that position, which is quite unique in that it plays several roles at once. Partly behaves like a precious metal, responding to macro uncertainty, real rates, and currency dynamics. But it's also an industrial input with demand for it linked to areas like electrification and solar. So that dual or double role matters because it allows silver to respond rather uniquely or differently to macro environments. And this is why allocators often think about it differently from both gold as a safe haven precious metal bet and purely industrial commodities across the complex. On that industrial demand side, there's the electrification theme. Solar has become increasingly important. And even as technology does evolve, changes in industrial processes tend to happen rather gradually, not instantly. And so, from a portfolio perspective, that does introduce a degree of structural visibility that isn't purely cyclical. So, this is where silver becomes less about prediction and more about signal watching. And it's not that silver, which has done phenomenally through 2025, must outperform. It's that movements in silver often reflect broader shifts in how markets are balancing growth, inflation, uncertainty, and real asset exposure overall. So for portfolio constructors in a multi-asset setting, the key question isn't whether silver necessarily goes up or down. It's whether this part of the market improves diversification and portfolio utility. Does it behave differently across regimes? And does it add resilience when traditional bond stock relationships become less reliable? And that's something I've talked about recently in terms of fiscal dominance. So heading into 2026 or beginning in 2026, I'm less interested in bold forecasts and more interested in where the debate is shifting. Commodities, I think safe to say, are no longer being dismissed outright. Silver's attracting a lot of attention, not because of just potential return guarantees or how it did in the calendar year of 25, but because it sits at that intersection of macro uncertainty and the real economic demand. So for multi-asset investors, that makes it a signal worth watching, not a trade to chase.